This is part 5 of the finance topic, and I'm going to talk about average rate of return. Now, if we are looking to invest money into something to grow the business, like a piece of equipment or machinery or a property that we think is going to add to the business and make the business sales grow, then we need to analyse how much is going to actually bring into the business. So a bit like if you put money in a bank account, if you put £100 in and you're getting 2% interest, then you know you're going to make £102 at 2%. And an average rate of return calculates how much we think we're going to make, so what percentage that is of the cost of the investment. And it means that we can compare projects. It's comparing investments to see which bit gives us the biggest rate of return, the most money in reward for investing that money. So what you need to do is you need to know how much you predict that the business is going to have as extra revenue over the next number of years. Now, the way we do this, in the exam you'll be told the equipment cost, say, £10,000, and over the next 5 years it's expected to bring in £3,000 per year. So the first thing you have to do is calculate the total new income. So you'll do 3,000 times 5, because 3,000 is the income per year over 5 years, so that's 15,000. Then you need to take off the cost of the investment, so you do 15,000 minus 10,000 to give you £5,000. Then you work out the average income per year, so 5,000 divided by 5 equals 1,000. Then at the end, once you've got your average net income per year, you do 1,000 divided by 10,000, so that's the average net income divided by the cost of the investment. And to make that into a percentage, you times it by 100. Now, the average rate of return tells us how much money, as I said, how much extra money a certain investment will bring into the business. A higher percentage means that the business will make more money from that particular investment, and obviously a lower percentage means that that investment will bring us less money. It is quite complicated to remember the steps, but if you try and remember what it is you're trying to calculate, you're trying to calculate how much extra income there will be, take off the cost of the investment, then how much it'll be per year on average, and then divide it by the cost of the investment. Hopefully clear as mud. No, do a bit of practice, come back to me if there's any issues, but hopefully if you learn that off by heart, you're going to be okay.